Want a reality check? You probably never make it in trading. And I know, after years of trying, that answer is almost impossible to accept because admitting it may never work out also means facing all the time, money, and belief you have already put into it. So, how do you know whether you are genuinely close or whether you should just give up and save yourself another few years of pain? Most traders say they want certainty. They want to know whether the strategy actually works. They want to know whether they can really make it in trading. And that sounds completely reasonable because living in the middle is exhausting. One week, everything looks like it is finally coming together. Then a few losses appear, and suddenly you are questioning the entire thing again. So you keep waiting for the result that will finally settle it. A profitable month or a payout. Something strong enough to make the doubt disappear. And whenever something goes well, it feels like we are getting closer. Maybe this is finally it. Maybe the last few years were actually leading somewhere. But the answer never feels complete. One good trade is not enough. One good month still could be luck. So you keep going, waiting for the next piece of proof. And this can continue for years. You might be studying every day and taking trading more seriously than almost everyone around you. But emotionally, you are still waiting for the same moment. The moment trading finally says, the strategy works. You are going to make it. But after enough time, you have to ask a much more uncomfortable question. Are you actually looking for the truth about your trading, or are you waiting for one specific answer? Because the certainty you imagine usually looks like being proven right, all the work finally making sense. The other answer barely enters the picture. The possibility that this version of the strategy does not work, that it should not be continued. So you can spend years saying you want an answer, while only being emotionally prepared to receive one of them. You say you want certainty, but there is only one kind of certainty you are willing to accept. Then you start collecting evidence. A clean winner follows the rules and reaches the target, and immediately it means something. Finally, the strategy is starting to work. Maybe all the time you spent building it was worth it. You take a screenshot and add it to the reasons you should keep going. Then a loss appears, and suddenly the result needs more context. The market was strange. Maybe this setup was slightly different from the ones that usually work. And either explanation might be true. That is what makes this difficult to notice. I did this for years without noticing it, in fact. I remember going back to the completely valid losing trades and searching for a reason they should have not count. But when it loses, accepting the trade exactly as it happened creates a much harder possibility. Maybe the strategy followed every rule and still does not have an edge you think it has. So the trade gets separated from the strategy. This was one bad execution. This one happened during the wrong condition. But over time, the profitable trades stay inside the story of why the strategy works, while the losing ones get pushed outside of it. So you stop evaluating one fixed system. You start believing the strategy is profitable and the bad result are just hiding it. And that can make almost any strategy feel close. Every winner moves the strategy closer to being proven right. But no loss is ever allowed to make it fail. After a few years, trading is no longer something you quietly test in the background. Your family probably knows that is what you are trying to build. And over time, you become the person who kept going because all of this was supposed to pay off eventually. So ending the strategy would force you to look at what those years actually produced. What do you tell to the person who watched you pursue it? What happens to the version of yourself who was certain this would work? Continuing is easier. Another month lets the story stay unfinished, but ending it creates a gap. So criticism of the strategy starts feeling personal. A bad result does not only threaten the system, it threatens the story you have been telling about where your life is going. And once those two things become connected, objectivity becomes extremely difficult. A new strategy can fail quickly because there is not much attached to it yet. But after 2 or 3 years, even terrible results can feel easier to tolerate than admitting the entire direction may need to change. And the longer this continues, the cost of walking away keeps rising. After 3 months, dropping a strategy is annoying. You lose some time and move on. After 3 years, it is not just a strategy anymore. It's the answer you gave everyone who asked what you were doing with your life. So, the moment walking away becomes the smart decision can be the exact moment it feels most impossible. But there is a second question sitting behind the first. What does it say about me if this does not work. One clean winner appears, and suddenly stopping feels premature. Maybe the strategy is finally starting to work. One payout can do the same thing. The strategy is not failing anymore. It is almost working. And almost working is enough to buy it more time. Then you open social media and see somebody else post a payout. They say they struggled for years before everything finally clicked. The results say nothing about whether your strategy has an edge or not, but emotionally it still matters because it reminds you that people do break through late. So maybe you are simply the next one. And there is always more of it. Other funded certificate, other trader saying they nearly quit right before becoming profitable. You can find a new reason to continue every day without learning anything new about your own results. And every now and then, the market gives you the same thing directly. A good week appears. The strategy looks clean again. And stopping now feels like the worst possible timing. What if this is finally the beginning? What if the next sample is where it becomes consistent? The result is not strong enough to answer the question, but it is strong enough to delay the answer. So the strategy gets more time, and you continue waiting for maybe to become yes. Because yes would end the search. No would end the strategy. Maybe lets you keep both. So you keep searching, and keep believing you have already found it. Clear no would hurt once. Maybe can keep you stuck for years. So before you test the next strategy, decide what would actually make you stop. Do it before the losses arrive, before you are attached to the result. Define what the strategy needs to produce for you to keep trading it. Then define the result that would make you reject that version. Because if failure stays vague, it can always be moved further away. Another 20 trades, one more market condition, and the test stays alive. But writing down the line is still the easy part. The real question is what happens when the results reach it. Will you accept that answer, or will the losses suddenly need more context? Because a rule that only counts when it confirms what you hoped because permission to continue. Other losing month still leaves the future open. A verdict can close it, but that closure can stop you from spending another year trying to rescue the same idea that is never going to work. So do not start other tests until you are willing to receive both answers. Yes, this version works, or no, it does not. And when the second answer arrives, do not turn it back into maybe.